Hello everyone, my name is Anjali Yadav and welcome to the course Financial Products for Rural Market. Today we are going to start our chapter 2 of the course, that is Financial System and Rural Finance in India. We'll discuss the structure, process and the policy of the rural finance in India. So we will discuss the topics. The topics are RFIs in India. That in this we will discuss about the rural credit system in India, then agriculture credit in India. In this we will discuss about the trend, structure and issues in agriculture credit. Then thirdly, standards and methods of financing and rural lending. In this we will talk about the standards, methods of financing, and fourth is techniques and types of lending. So in this we'll obviously understand about the principles of lending and what are all the types of lending. And fifth, it is agricultural loan application and appraisal. In this we'll talk about the agricultural loan, how a person has to apply, and the appraisal procedure. So next, let's talk about the first topic, that is RFIs in India. So in this we'll talk about the rural credit. The rural credit system of India is divided into two segments, that is unorganized or informal, like for example money lenders and input suppliers and traders. And in organized or formal rural credit system, we can take the example of commercial banks, regional rural banks, who have a formal procedure to give credit. So in organized or informal segment of rural credit, it is the transactions are divided into three segments, that is well defined group. These are the groups which are well defined, and for example SHGs, they are the members of the group are all noted in one register or something, and they save every week or month, and that money is again given to the people who need the loan or some to tackle an emergency or anything. Then tied lending borrowing is the borrowing from the landlords and zamindars and all. So they are tied, like they have to anyway pay. The person who has taken loan has to pay at a regular interval, uh, or might be they can take more time to pay, but they have to pay at a strict notice. Then untied lending, in this we can take the example of friends and relatives. This is untied kind of borrowing or lending, where you can take how much ever amount you want and pay back at any time you feel like. So in organized or formal segment of rural credit, so this is less risk as compared to informal sector, as they serve for a purpose. And formal segment actually takes all the branch licensing, and whenever it gives loan, it does all the paperwork to act as a proof and takes collateral and all, so that there is security of repayment of the money. And in informal sector there is no paperwork, so it is kind of very risky, and the money repayment can be or cannot be given on time, or sometimes people forget even giving money back. So major sources of rural credit in formal segment are cooperative credit societies, land development banks, commercial banks, regional rural banks, and the government. So the factors that actually obstruct in the flow of bank credit to agriculture, that is that bank hesitate in giving loans to the farmers due to these reasons: the inability of farmer in providing security, and difficulty in loan recovery, as the crops don't go well in a season, so farmers don't have anything to sell, and then repayment. Then lack of up-to-date accounting of agriculture transactions. Farmers don't usually keep the record of everything they do. And small amount of loan, usually the high cost transaction, the transaction is high, so banks usually think that giving a small amount loan will make them suffer losses, so they are kind of hesitant in doing it. Then the structure of rural financial institutions. The structure is divided into three parts, that is commercial bank, then regional rural banks, and cooperative credits. Then cooperative credits are divided into two terms, that is short term loans and long term loans. In short term loans, we'll talk about the state cooperative banks, district central cooperative banks, and primary agriculture credit secure societies. So short term is credit structure is a three-tier structure, that is state cooperative banks, the DCBs, and this primary agriculture credits. So while every higher tier relies largely on the lower tier for dispersal of credit, and some extent also on mobilizing the deposit. So usually the big banks actually rely on the small banks and smaller sector of the deposit to get the fundings for their city banks. And in long-term loans, state cooperative agriculture and rural development banks, and primary cooperatives. So some such banks operate in small states, or which operate through their branch directly, and the other, especially that are located in largest states, have been operating through intermediary level called primary cooperative agriculture rural development banks. So this is the whole structure of the rural financial institutions that we follow in India. So as we come to the end of the first topic, so it's activity time. So you have to form a group of 5 to 6 members and form a role play. Role plays are the best way to learn a topic. We have to perform a role play based on the rural credit system in India, and let half of the class work on formal, and half of the class on informal. So you divide the class in half informal, and other one will be discussing about informal ways of providing credit in rural areas. I hope this activities goes well and you get to learn more about it. Thank you.